This has to be one of the easiest scalping strategies ever. Hey guys, so in today's video, I will be sharing a scalping strategy that I use whenever I'm going to scalp. This scalping strategy can be used on Forex pairs, it can be used on indices pairs, it can be used on crypto and commodities too. So this is not just for Forex, and most of the things we talk about in the channel literally can be spread across all of those financial assets as well. So first of all, I am an intraday trader slash day trader. However, I do scalp from time to time, and whenever I do scalp, this is the strategy that I use. Before I get into the actual entries, I need to break down why I was actually scalping in the first place. And so to do that, I need to break down what I was seeing on the charts first. So first of all, you need to ask yourself, where are you in price? And that's one thing I always talk about whenever I'm dropping these videos, is you need to understand where you are in price. So you can see that GBPUSD on the daily time frame, you can see that price is dropping. It's making lower lows and lower highs, and it gets to this point where we run out that low and now we're trading beneath this low. Whenever you're looking to sell beneath a low, you can't be superly over the top with your sells and trying to go for swing trades from the bottom. You need to be taking your swing from the very high to the very low. But because we're trading beneath a low, the mindset has to switch from a swing to a shorter position trade or a scalping trade. So that was one reason why I'm looking to scalp. Oftentimes what you're going to find is before they run out some kind of liquidity, there's normally some kind of rejection first from that area before actually fully going and taking out that liquidity. So one thing to know with price is that after price runs out a low and it breaks above a short-term high, it's looking to retrace. I'm not in any buys yet at this point, so I'm only going to be looking to get active when price drops into my point of interest. If I put this replay mode on, you can see that here there's a daily time frame imbalance here. So from this kind of sticks high and that kind of sticks low, there's inefficiencies here. So that just basically means there's imbalance here. And so most likely I'm looking for price to drop into that area minimum. But if you're like me, I don't just sit on my thumb and wait for this area to get traded into. I also like to take the trade down to my point of interest. So I'm going to go ahead and mark up that inefficiency for you. So from this kind of sticks high and that one's low, that's the imbalance over here. I'm going to show you what I was seeing on the 4-hour time frame too. There was also a little gap here that price had to fill. So basically I knew that once price got going, it was going to most likely look to fill in this gap and trade into the inefficiencies, but it doesn't mean that's over yet. On the 4-hour time frame, I identified this down close candle. I'm just going to shade it in for you guys. So here's our down close candle right here. So our move lower started from this wick high and ended at this wick low. So this is why I factor in the whole thing from wick to wick. This is why I factor it all in. And so I'm just going to mark up that wick high. This is my next point of interest where I was expecting price to drop into, and they're very open. The reason I've marked up those areas is because you know that price will turn around technically at these 3 points, nearabouts the very high, the open, and 50%. And now all I'm looking for is just a sign to take price down to the downside. That's all I'm looking for. I'm looking for nothing else. If price gave me that opportunity to take price to the downside, you guys know my points of interest. I'm going to hit play on a 4-hour time frame because you guys know what happened. News came out and sent this pair ballistic. It shot straight into our point of interest without giving us any kind of sign that price wants to go lower. So in other words, I couldn't get into that trade. One candlestick at a time. There we go. Boom. Serious candle. You guys know that only news can do something this crazy. And so when it does not give me an opportunity to get in, I would have been so blessed to be in from up here. But look, price doesn't always play out accordingly. And when price did this, I didn't get emotional about it. I didn't start saying things didn't work. I didn't start blaming myself or blaming my analysis. I understand that news has the capacity to do something like this. They will use news as a smokescreen to get price into their POIs or to run out liquidity or do both. So price traded through this imbalance over here. And what I'm going to do now is I'm going to drop down to the 15-minute time frame. So this is that daily imbalance. Price trades through the imbalance. And automatically in my head, I'm thinking, look, now we traded through the imbalance. The next point of interest or the next area that I would like price to get to would be the 4-hour down close candle. And I'm going to play it smart. I'm going to play it right to the very high of it. And the reason I'm thinking that is because we've burst through this point of interest. If I hit play again, so price absolutely burns through that imbalance like it's not even there. And so this is my sign now thinking, cool, they're looking to tap into the 4-hour down close candle. You can see the very high, you can see where the open is, and you know where 50% is. Sometimes before they get to their point of interest or before they run out liquidity, there tends to be some kind of rejection just to make people think that price is going to go up to the upside. So once I started seeing that rejection, this is when I started developing a case for where price is looking to squeeze to. So if I hit play again, there we go. I'm going to drop to the 5-minute time frame now. We just came shy of very high. We just missed it by 7 pips. And so I'm bearing that in mind at the same time. I'm also bearing in mind that we've bursted through that daily imbalance. And so literally that thing holds no weight. So I know now that price wants to mitigate that 4-hour down close candle. And now it's time for me to develop a case build a case to enter. And one thing I was always told, after a massive move, look for that retracement, look for that correction. And I was told that for quite some time. Whenever I saw like a massive push to the downside or upside, I would look to jump in the opposite way once it started slowing down. So that would have been me looking to jump in on this trade here to take it to the upside. And then most of the time I was annihilated. And so that happened multiple times. Price will continue. And I would always think, but what about the correction? So just bear that in mind. After a very big push, it does not mean that the push or the move is over. So it's about waiting for price to give you another opportunity to enter. And look, I know there's a massive inefficiency here. People might be thinking after they clean up this inefficiency, then maybe they might want to jump in. But the move is not over yet. This is when they traded through that daily imbalance. They left an imbalance here. I had noted this imbalance from that candlestick's low to that one's high. And we had just missed the 4-hour down close candle very high, the wick high, by 7 pips. And so I got active when price traded up into this imbalance here. I jumped in at roughly about 15,803 and I put my stop loss. I'll show you that now, literally at this high over here. So in other words, just above the imbalance, you can call it a 10 pip stop loss. And then the target was the very high of that 4-hour down close candle. I targeted this specifically, not only because it was a scalp, but because that's the highest point of that down close candle. And at the highest point is when they can technically move. I want to be out of the trade at the moment they tap into that. So now I'm going to go to the 1 minute time frame and show you one more thing. When price traded up higher into that imbalance, it also left relative equal lows down here. So I knew that the moment price got going again, this was going to act as a drawn price. And so this is why I was very confident in this trade. And now I'm going to hit play a few more times. So look what happened here. They also generated a little trend line here. So I'm going to actually mark that one up. So there's a little trend line here. And so when price was making high highs and high lows and had this little burst up to the upside, there would have been people thinking price is now broken out of whatever support and resistance zone we're in. So let me quickly mark this up for you guys real quick. So right here. All right, cool. Do you see how price is bouncing around the support and resistance line over here? When they burst out of this, people would have been thinking, cool, this is a breakout trade. We've just engulfed whatever candles there are to the left and they would have taken this higher. But I was of the mindset that all they're doing is generating a liquidity pool here and that they're going to run this. And so this is why this did not faze me. Hit play again. There you go. There was another breakout over here. Okay, that would have made people think that was going to go to the upside again. And once again, look, they ran that straight away. The moment they broke out, they went straight the other way again and took out the lows over here, these relative equal lows that they have left. The moment price broke out here, people would have put their stop loss within this region here and lower, so within 10 to 30 pips of this. And then they would have looked to go to the upside. And once again, look, they got violated straight away. And if I just cancel all of this out now, you're going to see that price literally went to our 4-hour. Let's go to our 4-hour. This is the 4-hour time frame now. You can see right here, price went exactly right to it, right to the wick and right to the open. But like I said before, because I know where I am in price, I'm looking to jump out of the trade at the very first point, which is the very high of the down close candle. And so this is why I collapsed the trade here. And so you guys saw on Instagram, I posted it. I'm going to put it up here too so you guys can see the trade itself. And you know, that was Gucci. So now let's move on to the indices. Like I said, it doesn't just work on Forex pairs. It also works on the indices too, and crypto and commodities as well. But I'm going to show you one on the S&P 500. Now I'm on S&P 500 on the 4-hour time frame. And like I said, this is another scenario where they've dropped heavily, once again, not thinking that the move is over. And you have to think about, so where are they aggressively trying to get to? So price aggressively dropped lower after traded into this inefficiency here. News came out and price absolutely tanked. And so in my eyes, I'm always thinking, so where is price looking to get to now, bearing in mind that the move is not over? Why would they want to retrace now? Just look at this. After that big push lower, what did they do? They continue to drop. Don't always think there's always going to be some kind of correction or retracement before our next drop. Always stay in line with it until shown otherwise. Price has made a big drop to the downside. Where is price looking to get to? So we have our down close candle here. This is where they started to push from, and then this is where they ended it. And so we have all of that. So once again, I'm going to go ahead and mark up the very high and mark up the very open of this. Cool. So we have all of this to play with. Price mitigates our institutional candles. And so even though price is doing this drop, we don't know whether price is going to get all the way down here. And so this is why you play it smart, you trade well, and you take it to the very open. And then if you want to have a runner, then you let your runner run. This is how price looks like on the 1 minute time frame. So price pushes lower, it gives us no clean opportunities to enter until price starts to consolidate here, goes sideways, and then it runs above. You can see how the price runs above this consolidation here, and also it trades into some of this inefficiency on the left. You're not looking to get active here because, well, I wasn't looking to get active here because the stop loss would have been too huge, but price dropped beneath this up close candle now. So now this becomes an institutional candle. This is our up close candle now. When price trades through that low over here, this becomes our up close candle. So now after price runs beneath this low, this is where this move higher becomes an institutional play. And then it also runs at this low. So, you know, that's also a good sign. When price returns back up into it, this is where I was active with my sales. So I actually sold, I believe, somewhere around here. I believe my stop loss was at this high here. Or just above the high, roughly about 37. And then the target was the very high of that 4-hour down close candle. I'm just going to go ahead and get that number real quick. So coordinates, and that was 39.62. I've just dropped some text here so you guys can see where I'm actually referring to over here. Now I'm going to go back to the 1 minute time frame, and now I'm going to go ahead and hit play on this as well. So I'm going to go to the 50-minute time frame for this and hit play, zoom out a little bit. Okay, boom. You can see price run straight into that area. It actually trades deeper into that down close candle, as you can see. But as you guys know, I like to trade right to the very high of the wick, because there's a higher probability that price is going to get to that wick high. And so that's why I like to take off the majority of my trade, and then I normally let the rest ride. We'll expand that a little bit. So you can see we actually smashed that. This is one thing I forgot to mention as well. So in my eyes, these are scalps. They're very beautiful opportunities. You can see this is 60 points and GPUSD was roughly about 55, 57 pips. It's a bit larger than your usual scalp, but then this is the kind of scalping that I do. I've gotten rid of all of that now. I'm out of the replay mode. I'm going to go ahead and put my executions on real quick, just so I know exactly where I entered from. So I entered exactly from here, as you can see, right here. And then I closed off right here. Well, a little bit lower. So generally my scalping is normally from a few minutes to maximum maybe 2 hours if it's just one of them ones where they're just dragging it out. But in this case, look, they absolutely dragged it out. They dropped price. They dragged it out for time, and then they dropped price again. So this one ended up being like literally like a 4 to 5 hour scalp. It was one of those. But when you know what the agenda is and you know where they're looking to get to, you can obviously capitalize on some kind of scalping opportunity. I'm gonna go ahead and show you the one for GE real quick as well, just so we get the timings right as well. From where I entered to where I TP'd, this one took 1 hour and 15 minutes. If you're that person who just doesn't want to be in a trade for that long, then this one would have worked out perfectly for you. That is the way I scalp. That is my scalping strategy. Peace.